All right, we're waiting for everybody else to come on. All right, we're live. Awesome. All right, let's do something here.
Okay, there's some feedback now from somewhere.
All right, everybody. Let's see if we can start this. There we go. Can you hear me, Nikki? All right, awesome. Everybody on Club. Now, let me get Clubhouse going here. We are working with many platforms today. So let me get them prepared. All right, so you guys that are on Clubhouse, I have pinned the link on the top of the page if you would like to come and join us on any of the other live platforms. I have posted the website. You can go over to the website. We should be live over there also. Someone let me know if there's any issues with that link. Arthur, maybe if you can do that, that'd be great. Awesome. All right. And we're good on Instagram. All right. I think we're good. All right. Awesome. Guys, I just want to say welcome, welcome, welcome. We're going to be very laid back today. First of all, good evening, everyone on Instagram, on Clubhouse, on Facebook, and all the other platforms. We are going to have an informative session on life insurance with Living Benefits 101 and taxes for individuals and businesses. We, as I said, are live everywhere. So if you could see me going like this, I'm going to make myself dizzy with all these gadgets that I have going on here. But I need you to take this time, since we are live everywhere. Clubhouse, start pinging people in the room. You know how we do. Share. You know how we do. Instagram, you can tag people and get them in here. Annie, it is good to see you. Donald, it's good to see you, honey. Nicole, awesome. And everyone who is on Facebook and all the other outlets, the website, everywhere. I need you to take this time and ping people in. Ping your family, your friends, your frenemies, your enemies. Tell them Lady G is on the line, and we're going to be talking about something that they need to hear. So often families find it hard to sit down and talk about this subject. But this subject needs to be talked about. And I promise you, if you get them in the room, I'll do the talking for you. So share on whatever platform you are on. If you have questions, you can drop it in the chat. I am asking those on Clubhouse to bear with us today. If you have questions, I will take them at the end. What we're going to do, we're going to close down at the end all the other platforms, and we're going to hang out longer on Clubhouse and do what we usually do. So those that are on Instagram, again, get people in, text them, let them know we're still on the line. So Father God, I just pray that something is said here today that changes the mind of your people. I pray that we plant a seed in their mind that will not be plucked up. In Jesus' name I pray, amen. So if you don't know who I am Lady G. I am a funeral consultant, a licensed financial professional based out of New York City. I am on a crusade to go state by state, community by community, planting the seed of the importance of life insurance and the benefits of having it. And then it's up to you to take the step to start a policy. This subject is very dear to my heart. I have cared for and made arrangements for not only my loved ones, but for others over the past 25 years. And it was the Lord who spoke both businesses into my life. And it's my passion to help people while they're grieving and before they even get to that point. You will often hear me say, I don't know who told the lie, but GoFundMe is not the funeral expense account. Yes, there are times that the situation calls for it. However, a majority of time, we put our families in the position to use GoFundMe because we did not do what was our responsibility to do. So my prayer is that the generational curse are broken, that we no longer become a statistic, and we take charge of covering ourselves and going a step further and leaving wealth behind. Not only can you get life insurance to bury you, you can use it while you're yet living. So we're going to get further into that later. Again, I can give you life insurance. I can give you every type of insurance for individuals and businesses, from health, home, auto, key man, business, liability, annuities, and so much more. And I am also joined by none other today. I am so happy. Miss Nicole Jones. We call her Nikki, but she is known as the Finance Falcon. And she is the co-owner and tax professional of the N. Jones Agency, an economic and financial services firm. She is the accounting and tax strategist and personal finance educator. She has over 20 years in the finance industry in both the US and internationally. And she is a proud wife, mom, and a United States Air Force veteran. So we just want to thank her now for her service in all areas. Nikki is out here. We connect because of the crusade. We're doing it on different topics, but we are both on a crusade. And her crusade is helping business owners navigate taxes to reduce tax liabilities, debts, and scale their businesses to reach their financial goals with peace of mind using legal, tax, and accounting strategies. So without further ado, since that we are in tax season, I'm going to ask Nikki to come and greet us and let us know what we need to know this tax season. Nikki, thank you, Queen, for joining us today. The mic is yours.
Okay, I'm just going to quickly try to unmute everywhere. Oh no, are we getting feedback? hopefully you can hear me on all the platforms. And just like Lady G mentioned, if you see me looking one way or the other, we have so many screens going right now, so we have to try and balance it out. But thank you so much for having me, for allowing me to grace the stage and all the platforms with you today, and for giving me this opportunity to talk about one of my favorite subjects, which is taxes. We are in that season, so I would like to start by welcoming everybody to compliance and reporting season, aka tax season. Now is the time to tell the government what you did and basically how you did it. I like to start off with some housekeeping, and that's going to be some dates to remember, some key dates here. So the tax season is in full swing. They've been open for all type returns a little over 2 weeks now, since the 24th of January. The first due date we're going to come to is going to be the March 15th due date, and that's for S corporations and partnerships. And what I like to bring to light about the partnerships is if you are a husband and wife team and you have an LLC and you are not in a community property state, you are considered a partnership, even if you registered that business as an LLC and you need to file the IRS form 1065, which again is due on the 15th of March and not the April deadline. The next deadline we're going to come to is April 18th, and that is the deadline for all other type returns. And in addition to that date being the due date for your returns, it's going to be the first quarter estimated tax due date for all of my small business owners and high income earners. A couple of other dates I want to mention are going to be the extension dates. But as I mentioned these dates, I always like to remind you that it is an extension of the time to file the paperwork, not the taxes due, not to make the payment if you are in a situation where you owe. But if you don't have your things together, you do want to file that extension nonetheless, because the failure to file penalty is one of the larger penalties. Now, that first extension deadline is going to be 15 September. And again, that's going to be for our S Corp business owners, those who have filed the Form 2553 with the IRS and you selected to be taxed under the subchapter S as a corporation, and for partnerships. And on 17 October, that's going to be the extension due date for all other tax returns. Um, I also want to mention that the standard deductions have increased this year, as they usually do for inflation. Now, they don't, that's not to say they keep up with inflation, but they do increase them. So we're going to start with the single filer. And that standard deduction now for the current tax year is $12,550. And what I like to tell people about that is that no matter who you are, how you file, the first $12,550 of your income is tax free, as that is the single or married filing separate standard deduction. Now, the next one is going to be the married filing joint or qualifying widow. And that standard deduction this year is $25,100. And finally, we have our head of household, which is $18,800 this year. Now, if even if you are not someone who exceeds that threshold and you don't itemize your deduction, just remember that there's potential for you to get a charitable contribution cash deduction of up to $300 if you're single and up to $600 if you are married. The thing you want to remember about that is just to make sure that you are able to support whatever it is you're claiming. And that's with all the things as it relates to the IRS. If you are a business owner and you have not filed your 1099s, yes, it is late, but that is something that you still want to do. And for those who need to file a 1099, again, that's if you have a business and if you paid a vendor or contractor $600 or more, and that's collectively over the 12 months of the year. If you paid that one person over $600, then you need to file a 1099. Now, some of the things I like to mention so that, to help you guys get ready if you're not already ready, or if you're already working on it, if you're feeling anxious about it, I'm going to talk about a few things that you can do to make filing easier for you this tax season and every tax season. And that's going to start with Just making sure you have all of your documents together and that you are organized. You want to pull all of your forms of payment, if it was W-2, 1099s. And let me take a moment right here and just let you guys know that you can be a W-2 employee and a self-employed person at the same time. If you are someone who has both W-2s and 1099s, you will fall under both of these categories. What that means is that if you made a profit of $400 or more, then you should be completing a Schedule C in addition to that 1040 to report all of your information. And that Schedule C is a profit and loss statement for your business or whatever that additional income was. Any kind of 1099s that you're expecting, whether you were an investor, if you had retirement, no matter what it was, you want to make sure that you have all of those documents, because you don't want to be in a situation, and we've already had clients to do this, where you file because you think you have everything, but you don't. At this point, you should have most documents, but just double check and make sure anywhere you got any kind of income, whether it was interest from an account, doesn't matter what it was. Another thing I like to mention is the virtual currency that has gotten big to the point where the IRS has a block on the actual 1040 where they ask the question in reference to it. So if you are somebody who is into the virtual currency game, you want to make sure that you have all of your documents as well for that as you prepare your return, or if you work with a professional. Um, if you have any issues, or if you have changed your direct deposit information, you just want to make sure that you have the current information, and that is what you are providing to your professional. Or if you're doing it yourself, you want to double check and make sure that you're putting the correct information in the system. Another big thing this year is if you are somebody who had insurance within the marketplace, aka Obamacare, is what some people know it as. Even if it was just for 30 days, you should have gotten a 1095A. If you did not, you need to go back into that portal and look at the instructions on what you need to do to get that form, because in the past, that has been something that may hold your return up once it gets to the IRS, but it would go through and be accepted. This year, we are seeing the returns get kicked back. And when we look up that error code, it is because their system is showing that you had at some point during 2021 had that insurance. Again, that is a form 1095A, and it has information that you or your tax professional will need to input on your return so that it can get accepted. Guys, we have a lot going on, so I know I might be talking fast, but just bear with me here. The next very important thing this season is the IRS in late December started mailing out letters. The first one that we want to talk about is the letter 6419. Now, that is going to tell you the amount that you received in advanced child tax credit payments. This is important because if you don't reconcile that information properly, your tax return may be held up. And get kicked into what the IRS calls a manual review process. And you don't want that, because what they right now they're stating that the delay could be somewhere between 6 and 8 months. But just let me tell you that the IRS has a backlog of millions of returns right now from 2019 and 2018 that they still have to go through. Now, it's not common for them to have a small backlog, normally maybe about a million returns or less, but right now the numbers they're throwing out are somewhere between 6 and 9 million. So you do not want to get into that situation. So what I recommend to everyone is, even if you are a DIYer, you might want to get a consult with the professional, because they're if as long as you do your due diligence and you pick the right person, they are going to be up to date and they can help you and give you this information about all of these new things, because if you don't do this, you could potentially lose out on thousands. Now, before I move on from the 6419, which is again the advanced child tax credit payments, if you are someone who files married filing joint, you and your spouse both will get the letter. What we are asking all of our clients to do is to go on irs.gov and create your online account, because the IRS has said that there's a small fraction of people who may have gotten a letter with the wrong numbers on it for one reason or another. And what they're telling us is that the most current information is going to be in their portal. So what you can do is you can log in, create your account, and then you'll be able to pull your copies of your transcripts. So it will have it listed on there, the payments and the amounts that they're saying that you had. The second letter that they started sending out is the letter 6475, and that one is in reference to the economic impact payment. Most people know that as a stimulus payment. The reason you want to check this and to make sure you provide it to your tax professional is because if you are someone who, through one way or another, you acquired a new dependent, whether you had a child, you adopted, or you were responsible for somebody new that you are eligible to claim on your tax return, if that happened in 2021, you are still eligible to get that money even if you did not get it before. Also, you just want to check it to make sure that you actually received the money. Now, we have found that a lot of clients are telling us that they did not receive it, but guys, you got to think back. This payment started, their first round of them started going out in March of 2021. So it was early in the year, but you just want to check and make sure before you tell your tax professional that you did not, because if you did and they put in that you didn't, then that's another thing that could potentially put your return into manual review. And what I mean when I say manual review is that the IRS, somebody there has to physically look at it. It's not going to just flow through the automated system. I also want to share with you guys, because we've been getting questions about this. At this current moment, Congress has not done anything to extend the unemployment deduction of the first $10,200. So as of right now, and we haven't heard that they are leaning towards that direction. So no, there is no current deduction there. That was only for tax year 2020. If you are someone who is part of the gig economy, and that those are people who drive for Uber, Lyft, Bite Squad, or any of those type services. If you did not receive a 1099, but you had a profit of over $400, you still have the requirement to add that income. A lot of people will say, I'm kind of like a I'm kind of like a self-employed. No, you are self-employed, even if it's something that you're only doing part-time. For my business owners, some things you want to do to make sure that you're ready for tax season is just like on the personal side. You want to have your business information organized. You want to have all of your income, all of your deductions, even if you don't know if it's a deduction or not. Provide that information to your tax professional and let them assist you with that if you need to. Now, if you are someone who still has to get your bookkeeping together, before you go to your tax professional, if they are not someone who provides both services, you want to make sure that you work with them to get that taken care of, because what you need to remember is that bookkeeping services and tax prep work are two separate services. So if you need to get both done, just make sure you work with someone. We definitely have consults available. You can get with us and we can help you get those things together, but you just want to have that done because it's going to help you. And what I mean by that is, if you're someone using the software, you want to have your financial statements together, your profit and loss, your balance sheet. You want to know, be able to show what is going on in your business. If you're a business owner and you have assets, we're going to be looking for your capital asset activity. If you use your vehicle in your business, even if the vehicle is not in your business name, there may be some potential tax savings there also. So you want to make sure you have that information. If you are someone who has a home office, and lots of people have a home office right now, depending on how, if you go the simple method or the actual, where you're also including uh, portions of your rent or your utilities and things like that, you just want to have all that information available, because there is a calculation that has to happen and you have to provide that information to your tax professional. If you go the simple method, then it's a little bit easier and you have to provide and you don't have to provide as much information. If you are a business owner who got a PPP loan, make sure you log into your portal and pull that information. And the portal could be, you could have gone directly through the SBA or you went through a lender. Either way, You should be able to go back and pull that information. Make sure you also provide that information to your tax professional, or that you have it available as you're going through the process, because depending on where you are in the process and what happened, there's information that has to be reported there. So you just want to make sure you have it all available. As a tax professional, I will tell you, I would much rather a client give me more information than I need than for me to have to keep going back asking for different things. Because, guys, I understand, especially in the case of people like me, we're doing this virtually. We ask these questions because the first thing is we're trying to make sure we get you all the credits and deductions that you're legally eligible to receive. We want you to be able to keep as much of your money as possible. There is no need to be giving the IRS a tip, but unfortunately, over 90% of business owners overpay every year in taxes, and it's simply because they don't know. They don't have the information, because they don't do proper bookkeeping, so they don't get all the deductions that they qualify for. This does not have to be your story. And that's why I'm on this mission, and I'm trying to share this information with as many people as possible. Collectively, just like with Lady G and the mission that she's on, that I'm so passionate about as well. Collectively we might be one drop, but together we can form an ocean, and we can make change that way, and we can make sure we get this information out. Some of the other things, as a business owner, don't be afraid to take deductions that you are legally eligible for. If they are things that you use to help move your business forward, the IRS says that it has to be ordinary and necessary for your business. Now, what that means is you do have to be in business to make a profit, but just let your tax professional work with you to make sure that you are doing this properly. As a business owner, it's really important to be building that relationship and to be building a team, because in order to be successful in business, you can't do it in a vacuum. You need to have a team around you to help you. You are a genius at whatever it is that you are bringing to the market, so make sure you surround yourself with people in the other areas that you need that also do those same things. Again, I mentioned, if you were a sole proprietor or a single member LLC, then you need to file a Schedule C. I'm going to say it because we have had people come to us after they filed their personal 1040 and say they need to file for their business as a sole prop or a single member LLC. Those things should be filed together, because if they are not, then you're going to be in a situation where you need to file an amendment. Um, Also, if you are any of the other entity types, then there's going to be another form, and it will be completely separate from your 1040. But you just need to have a clear understanding about what forms, based on the entity that you selected, that need to be filed. You need to be aware, because depending on the entity type, you have different dates that your stuff has to be in. And I'm going to stop there, because I know we're going to be live on all the platforms for a limited time. And I definitely want Lady G to go into the insurance portion, because that's a topic that's so important. And we just got to keep shouting these things from the rooftop. Again, I'm Nikki, and I'm one of the co-founders of the N. Jones Agency. We're on a mission this year to save taxpayers at least $1 million in tax savings, especially small business owners. So if you know someone out there who needs our assistance, please send them our way. And if it is you, definitely reach out so that we can see how we can connect and help each other win at this business game. And we can kind of help you be like the GPS in these IRS streets to help you win on the business side. Thank you again, Lady G, for letting me talk. I definitely appreciate being able to share my message, definitely on all the platforms. This is new for me, guys, so bear with me.
Thank you so much, Nikki. Appreciate you sharing. Let's get rid of the feedback here. All right. Thank you so much, Nikki. I so appreciate you. I hope you guys took notes. To know me is to know that tax season makes me, but Nikki makes sure that we don't go that way, and we meet our deadlines. I know, as an entrepreneur, I left Wall Street 14 years ago. Only thing I miss about Wall Street is that getting back something in taxes. Once becoming an entrepreneur, those days are somewhat kind of gone. When I do my taxes, I'm not in a rush because I always have to pay something. So I appreciate Nikki so much for joining us and talking with us. And I do see you guys in the chat, in Instagram, on Facebook. I know Clubhouse is ready to chime in here, but I need y'all to hold on just a little bit. And I do believe that our website, my website, is giving us issues. So if anyone was trying to get on the website, we will just repost the replay there. Don't know what's going on there, but when you're working with so many different streams, something is bound to go wrong. So it is okay. All right. Now. I want you guys to get ready. I'm not fussing. I'm discussing today. I'm not, Clubhouse is used to me coming out with all barrels, but I'm going to lay back a little bit today, be a little calm. If I get a little excited, don't get all crazy. I just get very passionate about this thing. So let's begin. And before I do that, please, if you need to book a consultation with Nikki, I have posted her link and Linktree. Please go there and grab it. Those that are on Instagram, you can grab it on Instagram. In fact, Nikki, can you actually post it in the comments in Instagram so that they can have that? And Clubhouse, you know how to get attached to her in her bio. Okay, so did I take care of all admin? Let's go. All right, so Treats and Designs, good to see you. Thank you so much. Nadeja, good to see you. If I start calling out names, I will be here forever. So let's talk about it, okay? Scripture says, Proverbs 13:22, a good man leaves an inheritance to his children's children. We need to do some changes. We need to do some changes. So as I said, we're going to talk tonight. And if I get excited at any point, y'all just know I don't apologize for it. I want to ask you guys a few questions. First one is, what account do you have that bypasses probate? What account do you have that bypasses probate? Number two, what account do you have that grows tax-free? Number three, what account do you have that replaces your income if you no longer could work due to an illness? Number four, what account do you have for your kids to go to college and not be penalized if they decide not to? All right. Nikki just gave a great summary of the tax code deadlines and what you should be doing this tax season. So before I go deep into the life insurance part, I do want to bring up a little bit about the tax side on the life insurance side. If you don't know, any cash that accumulates in your life insurance policy is tax free. You can withdraw it to do whatever you want with it. It is tax free. The only way you pay taxes on a life insurance policy is if you hit MEC. And I will go deeper into that in a little bit. But MEC is Modified Endowment Contract. Okay. If you go over that, then you're going to pay taxes. Anyone that's had a one-on-one with me knows that I break it down saying, okay, this is the most amount of money you could put into this policy on a monthly basis. You put any more, you're going to be paying taxes on it. And if you want to pay taxes, it's all good. Go for it. But see, my job And my desire is to teach us that we all have to pay the IRS, but we do not have to pay the IRS any more than we're supposed to give them. So if we can get around that, let's do it. And there is a way to do that. If you play the lotto, you hit the lotto and you come into money that you want to put into your life insurance policy because it would make more money, then you need to call your agent or the insurance company and say, I came into this money. I want to put it into the policy, but I don't want to hit MEC. They would increase the death benefit amount so that you can deposit that money and not hit MEC. That's number one. Another thing that I want to bring up with taxes is we all in a rush to retire, right? When you retire, I remember when I started working on Wall Street, I was excited when I had that 401k and they would match me, whatever I put in, they put in. And they make you feel like when you retire, it's going to be a nice bucket there waiting for you. Well, there's a thing first, taxes. And by the time you pay taxes, and we ain't going to deal with if you take that money out before 59 and a half, because then that's the penalty on that. But you're going to wind up paying taxes between 50%, some even up to 90%. Let's get real about it, where you barely walk away with anything in that 401k. But I worked hard. That company was matching me. I should be walking away with more than this. And then guess what? That paycheck that you get right now, you have taxes being taken out. One of those taxes is Social Security taxes. Do you know they make us feel like when we get those taxes taken out that they're going to give it back to us when we retire, and we will have an extra check coming in to help with whatever you want to do at retirement. The thing is, remember that 401k you have? It's an earned income account, okay? Because it's an earned income account, it's reported to the IRS. Because it's reported to the IRS, when you retire and you go to take money out of that 401k, if it pushes you over your income level, whether you're single or whether you're married, your Social Security is going to be double taxed. So you mean to tell me you took taxes from me to begin with, and now you're going to take taxes again because I want to take my money out of my 401k? That I have a problem with. But there's always a maneuver. I tell all my clients, keep an eye on your 401k. Number one, don't let it get top heavy. 401ks are not bad. It is not bad. If the company is helping contribute, it's fine. But don't let it get top heavy. What do I mean? When that balance gets too much, you better start rolling it over. Roll it over into an annuity, because an annuity is not an earned income account. So it will not have any consequences on your Social Security check. If I've worked all these many years and I have been working for myself for 14 years now. So I have been off of Wall Street, but I don't have a 401k to worry about. And it badgering my Social Security, but I want to make sure that everyone else knows if you've worked this hard, you want to make sure you can get everything you want. You earned every bit of that Social Security that you're supposed to get. And I'm not even going into the fact that this is Lady G. I believe that there is somebody behind closed doors trying to figure out how to stop you getting that Social Security check at retirement. Why do I think that? Because it was never supposed to be permanent. If you do the research on it, it was supposed to be temporary, and people started living longer and they couldn't stop it. Because they couldn't stop it, it got out of control, and it is one of the reasons why this country is in debt today. With that said, you're banking on something that just might not be there when you retire. Same thing with pensions. Those are the two things that you are banking on at retirement: pension and Social Security. That pension, when I left Wall Street 14 years ago, they was talking about stopping the pension. Recently, I heard of another company that's trying to stop it. Create your own retirement bucket so that you're not worrying if the government, I woke up this morning again that there was nearly another threat of a government shutdown. Make your own retirement bucket so you don't have to worry if the government decides to do another shutdown, that when you retire, you ain't getting that Social Security check. All right. Again, earned income accounts, checking, savings, CDs, 401ks. We all know people that live in rent stabilized buildings. If you have to report your income, it's an earned income. What you don't have to report is that life insurance, and you don't have to worry about the annuities. And that is the way to keep your stuff in order. All right, listen, there's people, let's go into life insurance because I'll go too deep into that. There are different types of life insurance, and people don't seem to know that there is. Everyone's financial situation is different, and there is something for everybody. There is two groups, temporary and permanent. What goes under temporary is a term life insurance policy and a group life insurance policy. A term life insurance policy, you can purchase it in 10, 15, 20, 30. They even have 40 years now, okay? But listen to what I called it, a term, which means it's going to end. It is temporary. You have people walking around here with term policies thinking it is permanent, and it is not. When you get a term, there are different terms out there, okay? With there being different terms, you never know exactly which one you're getting into if you don't ask. Because there are companies out here that just sell terms. So if they want your business, they're going to sell you with what they have. The different types of terms out there are level, decreasing, increasing, and the return of premium, and convertible. Convertible is when you get a term and are able to turn it into a permanent policy. Increasing is when you can increase the death benefit amount over a specific amount of time. Increasing has, decreasing, the death benefit drops as you get older, okay? Now, level is the death benefit remains the same through the life of the policy. I don't care which way you shape or form it. Term is temporary. I don't care which one you get. When that term is up, you no longer have insurance. And now you're 10, 15, 20, 30 years older, and you may not qualify for insurance if you're diagnosed with an illness, or you're going to be paying through the roof. So why play Russian roulette and take that chance? So you should be, if you have a term policy, you should be definitely hitting me up to get a quote. Find some, if you don't get it through me, get it from somebody. Get it a permanent policy because this is important, okay? We do not want our family running to borrow from Peter to pay Paul to bury you. Get a policy today. Get one that you know that it is yours. We had someone who had a term policy. They told her, you could get this policy. It has an investment side vehicle attached to it, and you could just invest the difference or whatever the case may be. Guess what? They lost all their money on the investment side, and then they unfortunately was diagnosed with cancer and they were dropped from the company. Now you done lost that policy, your money, and now you will not qualify for a permanent policy. Stop playing Russian roulette, because that's exactly what you're doing when you're dealing with term. This is the way I see it. If I'm going to tell God to keep me healed from all sickness and diseases, and then I go buy a 10-year term, which one is it? Do I want him to keep me from sickness and diseases, or do I want him to have me die in 10 years? The only recommendation that I give people to get term is if you absolutely under no circumstances can afford a permanent policy. And I mean really can't afford it. I'm talking about you not getting the Louis Vuitton shoes, the $100 sneakers, ordering Grubhub every other day, going out to eat, going to the movie, spending $100 here, there. That's what I'm talking about. After you have sacrificed all that and you still don't have no money after paying your bills, you can't afford a permanent policy, then go ahead and get a term, because I don't want you out here naked. But I'll tell you one thing. I tell everybody, the minute your financial situation changes, turn that policy into a permanent policy, because it will come back to bite you real fast. Do not play Russian roulette with your life. Term policies has no cash benefits to you whatsoever. None whatsoever. When I tell you, it is only beneficial to your beneficiary when you're gone. All right. Where are we? Okay. So, and only 2% of term policies actually pay out. 2%. Yeah, think about that. Let that marinate. All right. The next one is the group life insurance. That is when your job says to you, we're giving you insurance. You don't have to pay a thing for it. It's on the house. I remember when I started working on Wall Street and the company gave me those papers. I was like, oh, really? This is good. I ain't got to pay nothing. See, that's what gets us, guys, that free part. And we don't dig a little deeper. Okay. You get what you pay for. And with group, that's about nothing, because the minute you quit, you get fired, or you retire, you do not have life insurance any longer. They do not let you take that policy with you. However, there are a few companies that will, but I promise you this, you will pay so high a rate that you might as well have gotten your own permanent policy on your own. So if you have term and if you have group, you should be hitting me up to get a permanent policy before you're out here and without a ship or a sale. Okay. There is no cash benefit to you with group life insurance. It's only beneficial to your beneficiary if you pass on the job. That's it. Okay. Next you have, and only 0.9 of group life insurance policies actually pay out. Let that marinate for you. Now let's go into permanent. Permanent, you have the first form is whole life. Now, whole life is the dividend, the death benefit remains the same the entire life of the policy, which means your monthly payment stays the same. Okay. Now, when you want to increase, you cannot with whole life. You will have to buy a whole nother policy. Whole life cannot be changed at all during the life of the policy. You can pay it up in 10, 20, or 30 years, or you can pay it until you're 100 years old. It will cover you until you're 121 years old. There is no guaranteed dividends that will be paid out, but there is some cash accumulation that will come. I usually show my clients 3 graphs. One graph is fixed, one graph is a variable, and one graph is index. Think of whole life as fixed. It's not going to but edge up just a little bit, and that's it. It's going to go slow pace. You got people that got whole life policies when they were a baby, and 30 years later, they wondering why this is only the little bit of cash that they have in it, because that's how whole life works. Then you have universal life. Universal life is like whole life, except for flexibility. It is for that person who may be 20 years old and says, I want to make sure that my family is not worrying about how they're going to bury me. So they will get a policy. But they said, I might have kids down the line. I might buy a house down the line. So I might want to increase. Okay. Universal lets you do that. Universal life makes you do that. It allows you to change the death benefit amount. It allows you to change the monthly amount. So if you start off with in your 20s with 200,000, when you turn 40 and you have kids and all this, you can increase it. It's the same for the 70-year-old who might have an $800,000 policy and says, listen, I done got rid of the kids out the house. I done sold the house. I don't need all this insurance. I want to go down. Universal life gives you that flexibility. There is cash accumulation also in a universal life policy. It is practically variable, which means it's tied to the stock market. You can do up, down, up, down, up, down. So you losing money, gaining money, losing money, gaining money. That is a variable universal life policy. So know the difference between these policies. Another permanent policy is index universal life. People say, but I ain't never heard of that. Well, it's been out now for a little over 20 years. So let me introduce you to Index Universal Life. It is a wonderful product. People want to debate me on that. You can go for it. But it is a life insurance policy with a savings account vehicle attached to it. What do I mean? That same money that you're putting in your bank, where your savings account, I promise you, is getting less than 1% interest rate on it. So if you have $1 million sitting over there, baby, and you happy about it, you want to be like the wealthy, but you got to do like the wealthy do. They don't care that the $1 million is sitting in KeyBank over there. All right. They want to put it somewhere where it's going to double, triple, and grow more. And that is the opportunity that arises in an index universal life policy. An index universal life policy has I call a ground and a roof. The ground is 0.75%. The roof may be 15%. There's companies that give higher. I'm just thinking of one company in particular. What that means is if that index is in the negative, back in 2008, the index was negative 38%. I want you to think of you losing 38% of your money. But the only person that didn't lose money is those that had an IUL, because when it's in the index is in the negative, you will at least make 0.75%. I don't care if that is enough to cover whatever administrative fees are on that account. You're making money. Okay. Now you can make all the way up to 15%. So I want you to just do a little math. You ain't got to be the most rocket scientist or a mathematician or whatever, but just think about $1 million in the savings account making less than 1%, or $1 million over here making be able to go up to 15%. Just learn what, work it out there. I ran a policy. I've been actually doing a lot of policies for babies, and kudos to the parents out there that are getting these $1 million policies for their babies, because they see when I work out the formula for them, how that $1 million will have now, when it doubles, when it triples, when it makes more. You know, you want to make sure that your child can go to college without worrying about student loans. You start that a newborn baby. You can get a policy on a baby from the time they are day 16. You have to wait 15 days. When it's day 16, get a policy, get $1 million. You have made that baby a millionaire before they are a month old. You have now broken the statistic that they would ever be broke. That is what we have to change. So when these people are doing these $1 million policies and I show them, Like, okay, this is how much it will be in there when they're 18. This is how much they'll be around 40. So yeah, with their first car, if they want to go purchase it, they don't have to worry about going to the auto dealership. And if your credit is a little ishy, you know, you getting 20% interest rate, then guess what? You can go to your policy that you started for your child and take that cash out there from there at a 2% rate. Because this is Lady G. I ain't telling nobody what to do. This is just my recommendation. If you're going to take money out your policy, okay, there you have the option, withdrawal or a loan. Guess what? If you have $100 in your bank account at the bank, you go to the ATM. Now you're getting less than 1% interest. You take that $100 out. Boo-boo, what's there that's working? What money you making with the less than 1% interest rate? You done took it all out. The same thing, picture it with the IUL. If you take from the cash, you're taking from your cash cow. But take the loan from the death benefit, the cash continues to grow, and the death benefit you took at a 2% rate, and you have the option to pay it back because you're taking a loan on your own money. So you pay it back, you don't pay it back. You don't pay it back, that's less when you leave here, your beneficiary is going to get. Guess what? It is what it is. Be smart about these things. Be smart. So I was talking about the banks. So everyone puts money in the banks, right? Do you think the bank is waiting for you to come and get that money back? It's not sitting there and waiting for you. They go and put that money in an IUL. Why? Because that's how they make their money. Because if they can make 15% on the money you done put in the bank, and they just got to give you less than a measly 1%, then guess what? They done made a 14% profit. I mean, come on, guys. So why would you not use the same vehicle that they're using? If I can tell you, Wells Fargo has $19.4 billion in life insurance assets. JP Morgan Chase has $12.1 billion in life insurance assets. PNC Bank has $8.7 billion. Truist Bank has $6.4 billion. US Bank has $6 billion. Citibank has $5.3 billion. The Bank of New York Milan has $4.5 billion. KeyBank has $4.1 billion. State Street Bank has $3.5 billion. I have a list of over 800 banks, and I just gave you the top 10. This is what people are using. Why would you not use the same vehicle? Big banks, big companies, Pfizer, Disney, Walmart, all of them, they use IULs to make their money. So if you want to be like the wealthy, you have to do like the wealthy do. If you don't, then it's on you. I'm just telling you that there's this new vehicle out that you can use that can increase your money over time. So that baby who started with a $1 million policy, by the time, if they never touched that account, and by the time they were 65, the woman's seen that it is now worth like 19 million. Do you know that's a retirement set for life? But even in between, imagine being able to just pay straight cash for a car, be able to pay for their own wedding right there with the cash, be able to go and travel. You have created your own retirement bucket. And you have now made that child a millionaire or whatever amount that you decide, but you decided to get the child on good ground. For those, listen, I said earlier, I can give you all types of insurance products. You want auto insurance? I can give you that. You want business insurance? I can give you that. Liability, workers' comp, or health insurance, all that I can do. I can put you in annuities. I can IRAs, 401ks, all of that. Okay. I can put you in 529s. But this is Lady G. And I just tell someone, can I just give you a little recommendation? I ain't telling you what to do, just giving you a little thing that I would like to call a little advice. If you don't know what 529 is, a 529 is an account that was created, all rightfully so, to start accumulating cash in an account for your child's education, college education. If you have a 529, I applaud you for doing right by your child to start them off on the right foot. I have nothing to say against that. But when new things come out, sometimes we have to make changes. Change is good, guys. Change is good. Embrace it. It's going to come whether you like it or not. A 529, if these raggedy head kids that are coming out come to 18 years old talking about they don't want to go to college and I done saved all this money up for them to go to college and they don't want to go, telling me college ain't for them and they want to do something else. Okay. Well, now I got all this money. What am I going to do? Leave it to me. I'm going to travel around the world so I don't kill the child. But if I do that, do you know I'm taxed? I'm paying taxes on the money that I saved to send this child to college. Why am I being taxed? Because it's being used for something other than the purpose that it was intended. And it was for that child that was supposed to be taking themselves to college. Same thing if they decide to go out of the country. I'm going to be penalized because now they're going out of the country. Something is wrong with this picture. So I would just like to suggest, this is just Lady G, there is a product that is called Index Universal Life. If you put that same money and let it sit in the IUL and create money and create money and create money, you can decide whether to use it to send them to college. If they decide not to go to college, you say bye-bye then. And you can use it to go travel around the world. You can go to shopping spree. You can do whatever you want. There is no stipulations on the money that accumulates in an Index Universal Life policy. Where in 529s, there's too many stipulations. I got to say boo-boo, bye-bye. But anyway, everyone, there's people that like diversification. So if you like diversification, diversify yourself then. I'm just here trying to tell you a little something that you might not know. I want to make sure, just like the IRS, I ain't giving nobody nothing that I worked hard for. If I can keep it, you're best to believe that's what I'm going to do. So that is just a little insight to those 529s for you. Next, we have another one is final expense policy. A final expense policy is typically for the person who either cannot qualify due to illnesses. Some things can just come up. Or they're just that person that don't want to leave nobody nothing. And they say, listen, just give me enough to bury me, throw the dirt, have the service, and let me go on about my business. Whatever your choice is on you. Final expense does that. The thing with final expense, the most you can get is $40,000. And if it so happened that God would see fit to call you home in less than 2 years of having that policy, only what was paid in will be paid out to your beneficiary, whether it's for your services or whatever. So if you only paid up to $2,000, that's all your boo-boo going to get, plus about 10%. Now, if it's after the 2 years, then the entire amount will pay out. And that, like I said, depending on age, I can typically get you up to 40,000. Everybody across the board, just not me. Everybody can get you up to like 40,000. There is also guaranteed final expense. Now, guaranteed final expense is no health questions. Now, final expense is health questions. Guaranteed final expense is no health questions. That you can only get up to $25,000. And you usually typically have to be over 50 years old to even be considered. I didn't say the ages on whole life. I can get you into a policy up to 80 years old. So up to 80 years old, you can get covered, and it would cover you until you're 121. And with the Index Universal Life, I can get you up to 85 years old, and it will cover you up to 121 years old if you feed it correctly. I digress. Index Universal Life. Let me make this announcement. It's not for everybody. you get the full benefit of an index universal life if you're going to feed it correctly. In the insurance world, they say overfunding. That means that if it's $100 for the policy, the more you add to that 100 is feeding the policy. So the same way you have a savings account, you put $100 in, let's just say you were getting 1% interest rate, you make $1. You put 400 in, you make $4. You put 800 in, you make $8. The more you put in is the more you get. The same with an IUL. I was talking with a client yesterday and he was so funny. Don't know if he's on any of the lines, but so hilarious. I was talking to him. I was showing him the numbers and I showed him if he just opened the $1 million policy and then if he overfunds the $1 million policy. And he's like, those numbers don't look the same when you don't overfund it. Well, boo-boo, they giving you $1 million for the low cost of a death benefit. But yeah, if you want the cash side to grow, you're gonna have to feed it. Yeah, you're really gonna feed it. Otherwise, that $1 million is only beneficial to your beneficiary when you leave here. So again, I'm finding people don't know how much insurance to get. Listen, and I think my heart is to the men right now, because I'm finding the men have this thing where, well, I don't want to talk about it. Y'all ain't wishing death on me. I keep telling you, I don't know where you come from, but last I heard, you can't stop death from coming. So whether you talk about it or not talk about it, it's coming. You just don't know the day nor the hour. I had a 30-year-old left here. He didn't know the day or the hour. You had a 20-year-old killed in a car accident. She didn't know the day or the hour. You had a 2-year-old just hit by a car. She did not know the day or the hour. This life thing is real. And the point that I'm trying to get us is that you don't have your family running to GoFundMe, because I don't know who told the lie. GoFundMe is not the funeral expense account. GoFundMe was used and created for businesses to find startup funds. And then somebody turned it around. We're going to leave that alone. We need to do better. We need to make ourselves a priority. Life insurance is not just for when you're gone. You can use it while you're living. If you get the right type of policy, you can create your own retirement account. Start early enough. You don't have to be that person who, when they retire, have to go back to work in a year because they can't afford it, because inflation is so high. The news is out. Inflation is now, if I'm not mistaken, the number was 7.5%. It was just 7% a few weeks ago. Before that, it was about 5.6. It's going higher and higher. So you're banking on this Social Security and pension. Do you think they are banking on giving you enough to cover that with inflation? Even though I digress, I did get a memo yesterday or a few days ago that so everybody getting Social Security now, you're getting an increase by 5.9%. They're giving an increase of 5.9%, and praise God for that, because every little bit helps. But today's report, the inflation is 7.5. So we're about 2% low here than where we should be. So you might be barely getting by with that pension and Social Security at retirement. And if I walk into another grocery store and see a pack of wings for $20-something, I'm gonna be the one on the news, because they're gonna say crazy woman done lost her mind. Gas is up. Everything is up like 20%. So why take that risk and not create something that will cover you and cover your family? Life insurance has living benefits to it. One of them is the cash accumulation if you get the right type of account, and that out of all the products, it's an index universal life. Second, you have things like terminal illness rider. Terminal illness rider is if a doctor diagnoses you with less than 12 months to live, they will one phone call, pick up that phone, call the insurance company, and tell them to cut you your check. They will cut you a check up to 100% of the death benefit. That's $1 million policy. They cutting you a check up to $1 million. Critical illness rider. If you are, God forbid, diagnosed with heart attack, stroke, cancer, blindness, HIV/AIDS, one phone call, they will cut you a check up to 90% of the death benefit. Chronic, the thing that we take for granted every day. If you are unable to do 2 of the 6 daily activities of the day, feeding yourself, clothing yourself, bathing, showering, back and forth from the toilet to the bed, one phone call, and this is all due to an illness, one phone call to the insurance company and they'll cut you a check up to 90% of the death benefit. If it's a $1 million policy, that's $900,000 that you can get for the critical and chronic. Why is this good? Because if you are, God forbid, diagnosed with an illness, and we pray healing over your body, you can go home and heal in peace instead of going home worrying that that doctor just told you can't go to your 9 to 5 because you have to go home and heal. So you go home and heal now because you know that there's a bank account that you have that you can withdraw from with the cash already there. Instead of worrying if you can get unemployment or food stamps or disability checks or anything like that. This is just Lady G. I believe that the graveyard is full of people that did not need to be there. They're not there because of the illness. They're there because the stress put them there. They didn't get to go home and heal and deal with their illness. They were too busy stressing about the mortgage having to be paid, the rent have to be paid. I got to feed my kids. Who's going to be taking care of my kids? All of this. Just imagine if you had these riders on your policy, it could stop all of that and you can heal in peace. You have long-term care rider. If you add a long-term care rider to your policy, then you can, you can put that on your account. And if you do that, then guess what? The only difference with that is you have to pay out and they reimburse. That's the difference between terminal and long-term care rider. So if you have to go home and heal and you need that extra care from a nurse, an aide, or your health insurance is not covering all of the bills, then you can pull from the long-term care rider. But again, you have to pay out and they'll reimburse you. I want to start winding this down. I know I didn't even get real into everything. Funeral expenses. People don't even realize how expensive it is. You could be looking from $7,000 to $20,000. I had someone, as funny as it wasn't funny, but they said, I got to pay to get buried? I got to pay for the graveyard? Boo-boo, they ain't just opening it up and digging it up and just throwing you in there. You have to pay. You're paying for the flowers. You're paying for the hearse. You're paying for the tolls going with the hearse is going through. You're paying for a tip for the driver for the hearse. You're paying for the driver. You're paying for the prayer cards. You're paying. If you have, and I know here in New York and New Jersey, all cemeteries are now running out of space. So the days of single plots are about bye-bye because they're running out of space. So they're doing double and triple plots now. So yeah, you even pay on those plots. The next person that gotta go in, they gotta pay to open it. The family's gonna have to pay to open it. So this thing can get up there, okay? So you have to keep that stuff in mind when you're not having a care in the world on having a policy and your family is now left not only grieving for you, their grieving done turned into stress. I cannot tell you, I told you I'm a funeral consultant also. So I'm on both sides of the table and it's hurt my heart to sit at a table and you done went from grieving to stressing because 1 minute we've just lost a loved one and then the next minute when the bill is added up, how are we paying for this? Because the person didn't have a policy. And that's what leads to GoFundMe's or fights in the family. Can't tell you how many fights happen over money and things. You can avoid all of that just by having your stuff in order. So as I try to wind this down, I need you to make a decision today to do better. Do better because, we're the only, there's two sets of communities. There's the one that when they lose somebody, they cry, they boo-hoo, they said, I lost mom, I lost dad, but you know what? Mom passed, but, she left me a $2 million policy. Or Uncle Joe passed, but you know what? He left me a $50,000 watch. Then there's this other community. Somebody passed. We cry. We said, really? They passed away? And we're like, yeah. And they said, oh, wow. And then the next thing they're saying is, wonder when I'm going to get the phone call asking for money to contribute to their burial. Or I just went on social media and there's a GoFundMe. There's something wrong here. There's something wrong. And I do believe it's a generational curse because, Lady G, when I was growing up, we did not talk about life insurance. And I think that's where the problem is. We're not having these talks. We're not getting deep with our families, having a sit down and saying, do you have life insurance? What is it that we need to handle today? We're not having those conversations. And because it didn't happen when I was growing up, if I didn't break that curse right now, it would happen to my kids. They never hear about it. And then their kids never hear about it. Whereas when people did talk about it, you hear them today say, oh, we talked about it at the table. That's why I have it. This is the change that we have to do. Today, make a dedication that if you do not have a policy, that you reach out to get a policy today. You also make up in your mind to have a talk with your family members and say, do you have a policy? I'm going to share this and they might be on the live. There is someone who shared something with me. Now, they lost a loved one and the loved one had said to them that, I like to do it like this. I'm going to do it. I'm going to do my jokes right here. So, you know how grandma used to be like, baby, now everything is taken care of and you don't have to worry about a thing. I have 2 policies and I want so-and-so to sing at my funeral. I want this one to speak at my funeral and this, and that. Had it all written out down to a T. Told him where it was. Said, baby, it's in the manila envelope under the slips in the back of the drawer. You just go there, baby, and you'll see it. That person passed away. They went to that drawer. They got that envelope. They went to the funeral home. Funeral home took that envelope, called the insurance company. She had 2 policies, all right, and both had expired. Nobody thought to check to make sure that the elderly were handling their business and not having a policy expire. So now we done went from grief once again of losing the matriarch to stress because how we gonna pay this bill? Because see, everyone has a reputation here on earth. If you walking around with Louis Vuitton shoes on, the name brand sneakers, the fancy car, the big old house, and then when you pass, we see a GoFundMe, I'm confused. And I can't be the only one. You seem to have it all together while you were living. Why are we looking at this now? Because you did not have your stuff in order. I'm going to say this without saying the name, so I ain't sued on no type of level. There is a certain famous person who left here on earth and they were a millionaire. But when they passed away, the wife had to put up a GoFundMe. She seen nobody was contributing to the GoFundMe, at least not at the rate that she was expecting. So she had the nerve to curse the fans out. When I read it, you see, I don't know Lady G. Lady G can. I sat there and said, had I known her personally, I would have took the pleasure of saying, baby, I know you grieving, and my heart goes out to you and your family. But let me tell you something. She wrote, you are not real fans because you're not contributing. And because you're not contributing, I'm going to cremate my husband because of y'all not giving the funds. Boo-boo, you are grieving, but it is not the responsibility of your fans. And at some point, it's not the responsibility of your family. It was your responsibility, husband and wife, sitting down, making sure that your house was in order. I have a problem. Why are you a millionaire and you don't have no money to bury? That's because we spend more than what we have. And I'm going to take the opportunity because I know Arthur will get me if I don't. Let's talk about this thing about probate. Probate, if you guys don't know, when you pass away, this is for the person that I feel it in my spirit. Someone's saying, I don't need life insurance because I got $1 million sitting in the account. My family can use that. Boo-boo, you don't even know if they're going to be able to use that. Because the minute you pass away, and if you pass away in a hospital, believe me, it happens even faster. Someone is going to walk to a computer, type in your name, date, and time, and say you're gone. And from that minute, all your accounts are frozen. Why are they frozen? Because they ain't worrying about your family burying you. They're not worried about your kids being fed. They're not worrying about you getting a hold of any of those resources for anything. They're making sure your bill collectors get paid first. You're gone, but you owe some people some money. And if Mr. Arthur he's on Clubhouse right now, but he's not on the platform to speak, he would be shouting, and they don't have to prove the debt. The court does not have to prove the debt. Somebody can just say that you owe them money, and the courts don't have to sit there and find out if it's true or not. So now we're going through probate. Now, probate can take months. It could take years. I have a few people, but one in particular always comes to my mind. His wife passed years now, and he still can't get into the properties because it's still going through probate. You could have stopped all of that by having your stuff in order. When it goes through probate, who do you think is paying the fees for those court fees? It is coming out of the money that you so-called had in that account. Did anybody see the news about Wendy Williams? She, I feel like, is going through a living probate. She's alive and they done froze her accounts. She can't even get to her money. That is what's going to happen to your family members when you're gone. The only 3 things: a living will does not keep you from probate. The only things that keep you from probate is life insurance, annuities, and a trust. And our next session is going to be talking about trusts, because you guys need to know that $1 million policy that you got for that baby turned 18, might not be in the right state of mind to handle $1 million. So you need to have a trust in place so you can have directions written out saying, don't give my boo-boo no more than, say, $5,000 here, $5,000 there. This is what we have to get in order. If you need to know a list of items that you should be grabbing, on the screen is the link. There is 2 ebooks that you can go and grab. One is an estate planning guide. It breaks down all of the items that you should be arranging now. For everyone that's waiting, Waiting just might be too late. And then you're leaving your family trying to figure all these things out later. I keep saying love is an action word. Do not tell me you love me if when I have to grieve for you, I'm going to have to stress. It's not love. Don't tell me you love me. Don't tell your children you love them if you leave here earlier than planned, and now who's left to provide and take care of those children without any additional funds? We have to do better. And as I said, if you start a baby off early, you can make them a millionaire. Or at least, listen, if you don't want to be a millionaire, you don't want to create a retirement bucket, just make sure that you have something to cover you when you leave here. That is the responsibility. I can care less if you want to have a retirement bucket. I can care less if you want to be able to pay for your child to go to college. But what I do care for is that you get that child and yourself covered ASAP. Because it is hard to bury a child. Imagine a family of the 2-year-old that they had to bury, and you lost a child and now have to worry about how to bury a child. This stuff is what's real, and we have to make it our business. So get that estate planning guide and get the Life Insurance with Living Benefits ebook. It breaks down, that life insurance ebook breaks down the different type of insurance so that when you don't get it with me, whoever you go to get it with, you'll know what you're asking for and what you want, and they can't just put you in any old thing. There is people, again, walking around here. I had someone tell me, I have a policy. They set up an appointment with me. See, Lady G can be very sarcastic. Y'all gotta forgive me. The Lord is not through with me yet. The young lady called me. We set up an appointment. And I make all these announcements. She might be on the live right now. She called me, made an appointment. We did an appointment. I said, what type of, she told me she had a policy. I said, what type of policy you have? Because she says, I just want to get an additional one, because you could get as many policies as you want. She said, I don't know. I said, well, describe it to me. And she goes to describing it to me. I said, boo-boo, you got a term policy. I ain't got a term policy. No, I don't. Boo-boo, you got a term policy. No, I don't. Now, see, one thing Lady G is not going to do. There's two things Lady G is not going to do. She ain't going to go back and forth with you when she knows she right. And two, I'm not a salesperson. I promise you, God had me walk this line because he knew what he was doing. I am not a salesperson. I tell you the information, and it's up to you to do what you want with it. So by the second time when I told her she had a term policy, I said, boo-boo, I need you to go find your paperwork, and then you call me back when you have it. The next day, the next morning, she was the first one in my inbox. She said, we need another meeting. I said, why we need another meeting? She says, because I have a term policy. You do? She said, but they told me it was permanent. Well, boo-boo, you need to read your paperwork. Now, how you telling the professional what you have and going to debate? And I'm trying to tell you what you have. And thank God that he ordered her steps, because guess what? That term policy was about to end. She would have been out here like a ship without a sail, thinking she still had a policy, and she didn't. I just had another client. She thought she had this group life and thought it was permanent. Didn't even know group life wasn't permanent. And then I had another person, same thing. Y'all need to know what type of policies you have. Don't get term because it's cheap and because you don't have to take a health exam. You get what you pay for. If you take that risk now, you will be sorry down the line. I think I'm going to wrap it up. I'm sure that there's some things I did not touch base on. I do want to take time with my Clubhouse family tonight, but I need you guys to make a decision to do better. Okay. You have my contact info. You can reach me in the office anytime. If the number's on the screen, it's 732-820-9710. You can get it off the website. Website is www.smithconsultings.com. Listen, when we know better, we will do better. So I tarried away from my notes tonight, and I'm sure I'm going to kick myself, I'm sure, when this live ends, because there's something that I was probably supposed to tell you and I didn't. But that's why we'll just have another live so I can get it all out again. So I want to thank everyone that I do see on Instagram and all the other social media. I can't talk and read your comments, so I'm now looking at your comments. Nadeja, I'm so glad. Yeah, I am so glad. Is there any questions that I can answer? Clubhouse, I'm going to come to you separately, but is there any questions in the chats that I missed that maybe I can answer before we close it down? Nail says, thank you, ladies, for all this informative info. I appreciate you both. We appreciate you.
Lady G, somebody asked for the ages again on the policies, the different policy types.
Okay. Whole life and universal is up to 80 years old, and index universal life is up to 85 years old. Let me say this as I said that. So you have to know that an 80-year-old is going to pay through the roof. I just did a policy for a client, and let me tell you something. I know why God orders my steps, and I'm thankful for days like this. I had just closed a policy for an 80-year-old young woman, and she's on, obviously, Social Security and pension. And when I gave her the rate, she can't afford that. So I said to her, Mom, how many kids you have? And she told me how many kids she had. I said, I need y'all to have a meeting. I need you to have a meeting and say, Mom needs a policy, and we're splitting it this amount of ways, and this is how much we're going to have to contribute to get Mom this policy. Because Mom's desire was, she's living in a house, and the mortgage is not completely paid off yet. She wanted to make sure that the house stayed in the family. So she wanted to get enough insurance to cover that her kids can pay off the house and keep the house. So I was speaking to the daughter, and the daughter said to me, when I suggested that she have a meeting with the siblings, oh, the siblings are not going to go for that. I said, sweetie, she said, but I tried already. I tried before, and they ain't going for it. I said, sweetie, have a meeting with the family and let them know you either want to pay for it now, or you want to pay thousands for her funeral and figure out how to keep that house. Tell me which one you want to do. She says, okay, I'll try. I'll go back. The very next day, won't he do it? I got a call. The siblings said that they were all for it. They were so in for it, they started sending her the money before I even got the policy approved. Y'all don't know unless you ask, and sometimes you got to ask a few times, because we some type of people. We don't want to give up no money, but you either pay a few hundred now, or you figure out how you paying 10 to 20,000 later. It's easy math. I mean, I love math, especially when it comes to adding up dollars. That's one of my other businesses. I do budget reports for my clients. I love math. That was an easy one for me. All right. So I'm glad you asked that question. So yeah, whole as 80 years old, and index universal life, I can get you up to 85 years old. Is there any other questions that I may have missed? I see a comment. It's not just for college anymore. Letty, I think you're talking about, the 529. Um, what else we have here? Nail, thank you. She says, wow, I never knew this. I'm reading Instagram, guys, so bear with me because I feel like they felt left out. All right. I think I see y'all did a lot, but I don't see questions. Yes, $1 million. That's what we need. $1 million policies. $1 million policies. I was talking about the men earlier, and I think I got off of them. That might have been the Holy Spirit, but let me grasp my way back. Men, if you have wives and children who depend on your income, you done set them up. You got wives out here that don't work because they're housewives. Ain't too many few of them left. We very independent women these days. But there are a few out here that are independent. They're home taking care of the children while the husband is out making the money. Well, if your wife is used to you paying the bills, the mortgage, covering the food and all that, make sure that, God forbid, your day comes earlier than expected. You have a policy that is fitting to keep her going on with that lifestyle for at least a few years so that she can grieve in peace instead of stressing and losing you, and you didn't have a policy. Now she's trying to figure out to run to Peter to pay Paul to bury you. And then how she got to move out the house now? I can't afford the mortgage here. I ain't even got a job. And I got these little kids to take care of. So now I got to move us all into a 1-bedroom apartment. I mean, this is real. So make sure that you get a policy and enough policy. It should cover that mortgage for a few years. It should cover that car you got her used to driving. If she's used to your income times your income for the 3 years, and get you a policy that covers that. So if it's more than $1 million policy you need, that's the lifestyle you created. That's the lifestyle you should keep. Remember, love is an action word. Any other questions that I miss? Do most of the policies go in effect? Yes. So the question was, Nadeja asked, do most of the policies go in effect right away? So the process is, depending on your age and your health, whether it's going to be complicated or not. If you're a healthy person, a young person, process is really real quick. I had someone literally get approved in 5 days. So you put in the application and it goes through underwriting. I have no dealings with underwriting except for when the underwriter reaches out to me because they communicate with me so that I can communicate with you. So if they have any questions on the underwriting side, I reach out to you. And then when it's approved, I know it, and then I'll let you know. So typically, like I said, the quickest I've seen is 5 days. And then I've seen some take a few months because the health was so bad and we're chasing down health records. So it can vary. It can vary. A decent average time, if your health is not horrible, maybe 2 weeks. If you have two choices. If whenever you're doing an application, if you give the first month's payment with the application, then yes, it does come in effect right away. It's called conditional coverage. And that conditional coverage says that you got a policy today. If something, God forbid, happens tomorrow, you are covered. That policy has to pay out no matter if it was going through the underwriting process and whether you heard it was approved or not. It has to pay out. So God forbid you pass or you get hit with an illness and you had those riders on it. Imagine having a policy one day and that $1 million check being able to be cut for you just like that. So that's the only way that the policy will go in effect right away, if you put the first month payment. If you don't and let the application just go in, then that means you're saying you're taking the risk and waiting for it to come through the underwriting process. And when you hear the approval, that's when you'll make the first month payment and then it will go in effect then. So I always tell my clients, don't take that risk. If we have learned nothing in the last 2 years, it is that, we don't know what's coming. I'll share this with you. And I share it in my clubhouse rooms. One day, because, Lady G can get out there sometimes. I had just had enough, juggling so many things, and I needed to take a walk. So I went and I put my ear sets in, and it was obviously not, this was a few months ago because the weather was nice. Put my ear sets in, took a walk, and 20 minutes into the walk, over my music that was blasting, I hear boom, and I turn around, and a car had rammed into a parked car, brought the parked car onto the sidewalk, missed me by this much. I had just walked past that parked car. Now, had I been walking a little slower, had I been a little distracted, this would have been a whole nother story. But to God be the glory. He has done great and mighty things for me, and he ain't through with me yet. I got so much more to do. And guess what? Even if my time was up, the family would not have to put up a GoFundMe. To God be the glory. I give him all the glory for that. So, we definitely, I suggest if you're financially able, put that first month payment with an application so that you're covered right away. All right. Did I miss anything, Nikki? I hope I caught everything. All right. So, guys, I'm going to go and give my Clubhouse family some attention. But if you, again, need a policy, please reach out to me and make an appointment on my calendar. You can go, there's the link to go directly to my calendar to book time, or you can give the office a call, 732-820-9710, 732-820-9710. I am thankful for you all. And if I did miss anyone's comment, don't charge it to my heart, charge it to my head and my eyes, and that I can't multitask when it comes to this. I'm good at multitasking at a lot of things. But to other people's stuff, not my own. All right. Social media, Facebook, YouTube, LinkedIn, Twitter, Clubhouse. Love you all. Thank you all for joining. And I want to pray the blessings of the Lord be upon each and every one of you, even those that look at the replay. I pray the blessings of the Lord be upon each of you. May he keep you from all sickness and diseases. May he keep you from dangers seen and unseen. I pray that you have the best night's sleep ever. And I pray that every door that you need opened is open, and every door that you need shut is shut. And that the next time I see you, you are better off than you was today. Why? Because the best is yet to come. I love you all. Those that want to meet me, go over to Clubhouse. We are going over there. I'm seeing still questions on Instagram. I need y'all to go to Clubhouse if you want to continue the conversation. Thank you. Love you all. Talk to you later.